Hi everyone, this is Robert Eldridge, and today's video discussion is 3 things to know about whole life insurance. The first thing you need to know right off the bat is you have to use a broker. The companies from the 70s and 80s that are based back east or in with Western Mutual, I gotta tell you, the thing is that I found out is when I'm up against them, most of the brokers don't even know their own policies. They just request a quote from the home office and say, hey, make it look better than this company. Well, I gotta tell you, that's pretty disgusting to me, because the reason why I know that is because I've been up against these guys and they only know what they're told. Alright, when you use a broker, we're able to quote multiple companies and find out which company is going to best fit your needs. In years gone by, these big insurance companies were the training grounds for most agents. Well, that's gone away because everyone's gone to the broker model, and their companies have been around 100+ years. Guess what? Our companies have been around a couple hundred years. So, you know what? It doesn't matter. What I look at is the cost of insurance and the rate of return and how much it's going to cost you on the back end when you access your money. And I'll get into that in a second. Second thing, these things need to be structured and funded properly. If you are trying to buy these and you don't really have a whole lot to put into it on a monthly basis, I've actually told people to get rid of their other policies with these same companies because, again, they have to make numbers. I don't. I say dump it, go buy a term policy, put a couple $100 into your Roth IRA or whatever, okay? Because you're paying for insurance, this isn't really working for you. It'd be best to go with a term policy. And I see those all the time, especially from a company from New York. Here's the other thing, that when I'm talking about this, I'm not talking about the death benefit, I'm talking about the living benefits. I get tons of emails and from all these agents. What they don't understand, the Susie Ormans and Dave Ramsey's out there, is I'm not solving for death benefit, I'm solving for maximizing cash value buildup. Okay, how do I do that? I solve for a lower death benefit. That way more of your money goes to building cash value versus paying for a death benefit. Now, depending on the client, I might do that in a couple ways. I might do a level death benefit. If it's a couple $100 a month, you know what, the IRS limits, we're going to be fine with the cash value. Now, I have people that do thousands and thousands and thousands of dollars a month. Well, guess what? I'm going to do a rising death benefit. That way we don't have any issues with the IRS. Okay? One of the other things I like to put on a whole life policy is a paid up additions rider. One of the best things you could ever add out there. The reason why is because it'll supercharge your cash value build up, and that's what you're in this thing to do at the beginning. You want to explode this thing. Paid up addition rider is the best thing out there. And by the way, you know, when you do business with a broker and these are structured and funded properly, I make about 50% less commission than these other big houses out there because I've structured this that way it maximizes your cash value buildup versus the base insurance amount, and that's where we get paid at. So that's why I make a lot less money than the other guys that work for these other houses out there with the big names on the big building downtown, okay? Because this is what I'm in the game for, to help people so they can realize what they want to do with these policies, which is build up cash value quicker. The other thing too is how much is it going to cost you to access your money? Well, if you don't know, most of the brokers out there don't know either. Most of these people that work at these big insurance companies downtown, guess what? They don't either. And that's why when I look at these, I always do use companies that are mutual insurance companies, number one, and I always look at companies that have fixed rate loan amounts on the back end. A lot of them have variable rate loans. Some of them are capped at a variable rate. I do a lot of business, and I get a lot of business from these companies back east because when I look at it in the first 10 years, it's going to cost you a hell of a lot of money to access your own money. Well, that doesn't make any sense. So it doesn't make sense to me. Why should it make sense to you? But maybe my company doesn't have the big name on the building downtown. Well, you got to look at the cost of that. Is it really worth it? Well, I think not, but somehow they're stolen business, so somebody's doing it. So we look at the loan provisions, and there's a lot of people out there that talk about they're expensive. Yeah, when you access your money and you do it with the wrong company, it is expensive. And here's the thing, if you go into this knowing that or not knowing that, it can bite you in the rear down the road. So let's look at some of the benefits of whole life. Most of them at the time of this video are 4% minimum guarantee with a dividend on it, okay? Now when you back out the rates, I always look at the internal rate of return. So even if they're saying, hey, we'll give you 4 with the 3% dividend, doesn't mean you're getting 7. It might you might, after fees, you might end up with 6.1. So that's one of the things I look at. I also look at the cost of insurance. How much does it cost for that death benefit? Well, the lower the better. The lower amount that you pay for the death benefit, the better for you. Again, I look at the loan privilege, things like that. Now, the dividends can change every year, but it's nice. I mean, if you're getting 6.5%, and you're not paying taxes on that, and also you're not paying taxes when you take it out, that's not too shabby. And there's no downside risk to this. Now, one of the things that you can do with whole life insurance is this. In the first 10 years, I had a lot of people have medical issues. Well, guess what? Go into your policy, take out the money, and pay for your bills. Let's say you want to do college funding for your kids, or a wedding, or a vacation, or retirement planning, or buy a house or car. It's your money. All you do is make a phone call. You call, they send you a check. There's no fill out this application, let's get you pre-qualified. No, it's your money. That's one of the nice things about this. You can access it anytime before you're 59 and a half. And if you decide to build it up, you want to take it out for retirement, take it out early. Let's say you're laid off early. Well, now you have some money to get you to maybe your Social Security, or to enhance your Social Security check, or to use it for the grandkids, or go traveling. Whatever, it's your money. That's the nice thing. And at the end of the day, it ends up having a tax-free retirement income should you choose to take an income stream. There's a lot of options, folks, here. Been around for 140 plus years. Hundreds of thousands of people around the country have these policies. And if you haven't looked at one, you should entertain one for a portion of your portfolio, and I guarantee in a couple of years you're going to like what you see. By the way, we're in business to ask for the business. We'd like to give you a consultation. Also, if you're an agent or broker and you want to know more about this, let me know. We have our own agency here. We can help you do that as well. And also, make sure you sign up for our free video course today, folks. Thank you very much for your time. Bye-bye now.